All right. Hello, everybody. Thank you so much for coming today. And today we're going to be teaching how to buy houses in California. And it's kind of overwhelming at times. It can be daunting. California home prices are so expensive. Interest rates are so expensive. How can anybody afford to buy a house? Well, people are doing it every day. There are closings, there's new listings, there's escrows happening. People are buying and selling homes all the time here in California. So we're here to teach how that can be done, even in the midst of today's market prices and with today's rates.
Yeah, so we're going to share a little bit about who we are, our business. We're also going to share the ins and outs of the home buying process, and then a little bit about our story. And then Kim Rivas, who's the broker owner of KD Capital Mortgage, is here to share all about the lending side, because all of the questions are about lending right now with rates. So
financing, for sure.
Yeah. Okay, so a little bit about who we are. Owen and I have been married for 6.5 years, and we got married a week after graduating from Cal Poly. And then a couple months later, Owen got his real estate license. He got into the business first. I joined a couple years later, and we formed our team in 2020, 2021. And we have a not so little baby anymore. He's 1.5 years, and we're expecting our next baby in February. And here's a snapshot of some of our team members. So we just love what we do, and we really believe in this is a family business. Yeah, so our values are we're honest, we're committed, we're proactive, and we also come from a place of educating and empowering people. So we want anyone who works with us to feel like they have all of the information they need and they're empowered to make the decision that's best for themselves. Our mission is to connect with individuals to achieve their real estate dreams, experience financial freedom, that's a big one for us, and love where they live. So we want you to love it here and not be, too overburdened by your mortgage. We want you to make a smart financial choice. So we're going to talk about some creative ways of buying real estate too.
What is real estate? This is the preamble to the Realtor Code of Ethics. It's something that's near and dear to my heart, and it says, under all is the land. Upon its wise utilization and widely allocated ownership depend the survival and growth of free institutions and of our civilization. So America is the greatest country in the world because they really pioneered land ownership for all people, and it gives people the ability to rise through social classes. So that's something we're passionate about. We want everyone to be able to own a piece of this beautiful country. And so land, that's real estate. It's all about the land right there. So this is a lot we sold one time. Vacant land. It's also about houses. So here's a single family home we sold, and then commercial real estate. So there's like 3 main asset classes, and we sell it all. That's in our logo. We do houses, land, and commercial property. So, okay, are we in a buyer or seller's market? And what does that even mean? Buyer's market means that there is 6 months or more of inventory. Seller's market means 6 months or less of inventory. So as we can see from the data right now, we are in a strong seller's market, and we have been for years. So right here, we're at about 2.6 or so months supply of homes. And in 2019, we were almost up to 5 months supply, but it has been an extremely low amount of inventory, which just means there's more people buying houses than there are selling. And so
a 2.5 months supply means if no new homes were listed today, that means the inventory we have available would only last for 2.5 months, which is crazy. That's such a short amount of time.
Yeah.
So in other seasons, right, in the Great Recession that everyone always refers back to right now, there were way too many homes available on the market. So they were in a buyer's market because buyers could be pickier. And right now we're in a seller's market where sellers have options. We're seeing multiple offers come in. So we will be at a more balanced market once we increase our inventory to hopefully closer to 6 months.
And so what are prices doing? As we can see, once the inventory was decreasing, prices started to skyrocket. They took off, and then they kind of peaked back here in 22 and then kind of plummeted. But as you can see, we've already rebounded. And so the reason for that plummeting price was due to the interest rates hitting 7%, almost 8%, very high interest rates the past year and a half. And we thought, okay, prices are coming down. Well, they've kind of already bottomed out and they've already recovered. And so people might be thinking, oh, I'm going to wait till prices drop. I'm going to wait till the market goes down even more. Well, if you just look at the supply and demand and what the economics are doing right now, it already has kind of bottomed out and recovered. And now with interest rates starting to drop back down, we're expecting to see that number probably continue to climb. And some projections we're looking at say that they think prices might go up another 6% next year due to the rates coming down to more affordable levels. So if you're trying to time the market, it's impossible. We don't know. We can't predict with the crystal ball what the market's going to do next. But what we can do is kind of look at the supply and demand and try to make a determination about where we think prices are going to go next. And so prices have already kind of plummeted and gone out. And so now is actually a pretty good time to get in before the rates drop and then prices continue to climb, because then you'll build some equity quicker. Mm-hmm. And then why buy real estate? These are some of our favorite things about this asset class as an investment. Number one, financial security. You know what your costs are. You can't have the rent go up beyond, it's fixed. It's a fixed rate mortgage. Wealth building over time. If you look at this right here, this is the median sales price for a home in the United States of America going back to 1965, when you could buy a house for like $40,000. Can you imagine that? Houses for $40,000? Well, if you go up to today's standards, you've got prices, they had peaked at about $450,000. And then nationwide, prices did dip. But as you can see here, we're already starting to see that recovery. And so this data is actually about a quarter behind, whereas the snapshot we looked at for our local market here in San Luis Obispo is live. So it's more recent. So we're already seeing that recovery here locally. And so we'll probably see that recovery nationwide. And then the interesting thing is each of these gray bars indicates a period of recession where there was an economic downturn. And even in economic recessions, historically, real estate has done well as an asset class in most situations other than the '08 recession, which was due to an oversupply of houses and bad lending practices. And then you had that whole thing flip upside down where you had way more houses listed for sale, but no one could actually afford to buy them. So prices dipped. And then real estate, if you rent it out, as an investment, you got that cash flow, appreciation, tax write-off, and it's a hedge against inflation, which our next slide will show. And so this is just astounding. I mean, we saw inflation at all-time highs. Well, in recent years, 9.1% was the peak of that inflationary period. So every dollar you have sitting in the bank is losing almost 10% of its value during that time. Right now, we're back to about 3.2%. The Fed has raised rates to make inflation go down, and it worked. As you can see, rates have gone up, inflation has come down. So we're getting back to a more stabilized, more normal economy. But if you have your money invested in that real estate asset, as the market, goes up or down, your house rides that tide. It's a hedge against inflation because your value is built into the house, not the dollar itself. So huge fans for that reason.
So we want to share a little bit about the language, right? Everyone hears the words realtor, escrow, pre-qualification, but what does that actually mean? So a realtor is someone who is a licensed professional to sell real estate, right? They are someone who has an active license. They uphold the Realtor Code of Ethics. And in California, you should definitely be working with someone who is a licensed realtor, active and in good standing with the National Association of Realtors. Now, escrow. Escrow is a third party that collects all of the money, the information, everything. They're the neutral group. So that way buyer isn't giving the seller money prematurely. It's all held in a safe place in escrow. And a pre-qualification is a lender's estimate about what they believe that you can afford based on just a general conversation. And the due diligence, we're going to hear that phrase a lot today, is what is the time given to do all your inspections and make sure that everything checks out on the property. So, that's like a home inspection, a pest inspection, that's making sure your homeowner's insurance is lined up. Everything about the property that you do during your inspection period is considered due diligence. Now, equity is how much financial interest you have in a property. And as we know, equity increases over time as your property appreciates in value. So that's another big reason why we love owning real estate in California, is because you'll see your equity grow. Your earnest money deposit is that good faith deposit. You put that money into escrow as soon as your offer is accepted, usually within 2 days, and that's protected by your contingency period. It's a portion of your down payment, so it's nothing in addition to what you bring to the table, but it's that first portion. And then your closing costs. This is in addition to your down payment. So closing costs, we estimate somewhere between 2 and 5% of your overall loan, because you are going to be seeing your loan origination fees, you have some escrow fees, title fees, etc., and all of that is going to be here. We estimate that 2 to 5%.
Okay, what does the process look like? Step 1, partner with an agent. The reason why that's the first step is you want to get access to local information, market data, as well as deals that are off market, coming soon, or exclusive through that agency. So for example, we've got a team of 6 agents that are all prospecting, looking for off market deals all the time. We come across things in San Luis Obispo and we tell our clients first. And then number 2 of that is with our brokerage of 200 agents here on the coast, there's a lot more deal flow. So we get to hear about things that are coming up. So that's one of the big reasons you want to work with someone local who's in production, doing a lot of business, because they're going to have access to more homes before they hit the market. And you want someone who is trusted, someone who you feel that you've got a good connection with and who would do a good job for you and your family. Step 2, get pre-approved. And that's why we have Kim here today. She'll go deep into the pre-approval process and what that means. Step 3 is finding your house. And the reason this one comes after that one is because we've been in situations where we show homes to clients and they fall in love with it. They're so excited. They're like, Owen, let's put in an offer. And then we talk to the lender and find out they can't because it's outside of their affordability. So we really want this step to take place before that step, just to avoid the heartache and the hassle of falling in love with your dream house that's just a little bit above your price range. Then step 4, this is where you write your offer. And in this market, we will call the seller's agent and ask, hey, do you have any offers? How many offers are there? Where do we need to be competitive? Like, what would we need to do to win this offer? And so we get a lot of information on the front end. Hello.
I'm so sorry we're so late.
Oh, no problem. Come on in.
Yeah, got off work late.
Okay, no problem. We
good.
got some refreshments over here for you.
Thank you. Thank you. I'm Jocelyn.
Hi,
You
Jocelyn.
were probably expecting my son and his wife, and they couldn't make it.
Okay.
So you can share.
Yeah, you'll take good notes for them.
No problem.
I
Yes.
brought somebody else that's ready to.
Oh,
Okay.
great.
Thank you, Jocelyn. Well, good to meet you. I'm Owen.
This is Sheila.
Sheila?
Hey, Sheila.
Nice to meet you, Sheila.
Nice to meet
Thank you
you.
so much. Oh,
We'll get you the replay because we're filming it as well, so we can share it with your
True.
son. The video,
Okay.
Yes.
recording.
thank you.
Okay, so then we're just talking about the steps. So step 1, partner with an agent. Step 2, get that pre-approval letter. Step 3, find your home. Step 4, write your offer. And so when it comes to the market, you want to know, are we competing with anyone, or has it been on the market for a long time? That's usually a sign of a good deal. If it's been on the market for weeks and weeks and weeks, that means they have no offers. The sellers are starting to get more motivated. Maybe they would take an offer below the asking price, or give you some concessions like closing costs, or do some repairs once we're under contract. Any questions about steps 1 through 4? Okay, step 5. Your offer is accepted. Congratulations, but don't celebrate too quickly, because in real estate, it's not over till it's over. You still have to make it through your due diligence period.
Yeah, so once you're under contract, that's the time where you have a little bit of a celebration, but you want to make sure the house checks out. So that due diligence, right? We want to get the home inspection, pest inspection. We want to make sure that the house is as good on the inside as it looks on the outside. And I know we've had many experiences with different clients who have canceled escrow during this time period because the house wasn't in as good of condition as it looks to be. So this is a critical time. Now, when you're under contract, you're buying this house contingent upon clean inspections, contingent upon everything checking out. So during your contingency period, you get the benefit of being in the driver's seat. You get to call the shots. You get to bring a contractor in. You get to do whatever you need to do. So this is a critical time to make sure that the house is in good shape. Now, during this time, the lender is going to send an appraiser out to the property, and the appraiser is going to confirm that the home is habitable, that it is being sold at a fair value. So that's another contingency you have, is your appraisal contingency. And then the last contingency is your loan contingency. So this is when the underwriter is going to ask for all of your financial documents, make sure everything checks out, and we want to make sure you get that loan before we move forward, because if you don't end up getting the loan, then we can't buy the house. So we have that contingency in place. And we're going to share stories about how we've seen at what you think is the end of the day and you end up not getting loan approval. What do you do? And we have stories that we can share with you. So anyway, that's what happens when you're under contract. So what we do when people partner with us is we kind of call it, this is the hand-holding time, right? We're going to walk you through every single step of this process. We're on the phone once to twice a day. You're also probably talking to your lender once or twice a day too. And this is the time that we want to make sure with 110% certainty that this is the home you're going to end up buying.
Mm-hmm.
So once you feel like everything is good, you check out, you release those contingencies, and right before closing day, we just want to make sure that all your funds are in escrow. We want to make sure that your utilities are going to be set up if you plan to move in right away. All of just the little details to make the moving day as smooth as possible. And then on closing day, in California, you sign a stack of papers about this big. It takes an hour. You bring your 2 forms of identification, you sign everything, and then you get keys to your new house. So it sounds like there's a lot, and there's 180 steps in this real estate transaction, but partnering with the right team is going to make this fly by and make that 30-day escrow pretty much as smooth as possible. So
yeah, who you work with matters for sure. And especially when it comes to the negotiations, because you do some negotiating on the front end to get your offer accepted, but then there's the second round of negotiations, which comes up when you're under contract. And so when you're doing those due diligence items, home inspection, pest inspection, we might need to get quotes from a roofer or a plumber or a foundation specialist. And once we get that new information, that's material information we could then use to renegotiate the price, because, hey, I didn't know that the roof is $10,000, the foundation is $20,000. So now we can go back to the seller and say, hey, we found out this is going to cost us this much money. Can you reduce the price $30,000? Yeah. So that's kind of the things we do, is we go back and negotiate and save our clients tens of thousands of dollars in the due diligence period. Hello.
Yep. Hi there.
Are you Rachel?
I am.
Hi, Rachel.
Sorry.
Thanks for coming. Glad you can make it.
All good.
So-
We're glad you're here.
Okay, so
Does anyone have experience from times they've purchased homes in the past where maybe they've had a scary home inspection or they ended up canceling escrow? Yeah.
Well, we just our first home we purchased in Salt Lake City, it was like 100-year-old home.
Oh,
and
wow.
And we had a very, very thorough inspection, which was a little bit frightening at first, just to see, because it was such an old house.
Yeah.
But our realtor was really helpful in that instance to be like, this is a normal thing. Given
Right.
the age of the home, it's fine. But yeah, our inspection was so thorough that we almost backed out.
Oh,
Okay.
yeah.
So
Okay.
it was important to have a good realtor to give you some
Good.
perspective.
That's so good.
So you
Good.
bought it.
Yeah,
And-
it did. It was
okay,
great.
that's
Yeah.
great.
It was good. The house
Yeah.
didn't fall over.
Yeah, the house
See?
didn't fall over.
Those inspections, they're so thick. You're like, oh my gosh, the house is about to fall
Right,
over.
right.
But it's fine.
Yeah.
Most people, like,
Yeah.
we all live in houses that have something wrong with it. So.
Yeah.
Did you have a story, Jocelyn?
Oh, we bought a 1911 farmhouse.
Oh, wow.
On 160 acres, and that was very tiresome time.
Oh,
to,
my goodness.
get all of that done.
Wow.
And all the paperwork and the inspections, because nothing was normal.
Yeah.
Wow.
So,
Where was that one
in
located?
Adelaide.
Oh,
off
that's
of,
so beautiful.
Chimney Rock Road.
Oh, love it out there.
Wow.
That's
Wow.
Back
great.
in 2003. So,
Awesome.
Wow.
Yeah.
So cool.
Wow.
Great.
Yeah. Yeah, I know there's always going to be that thorough inspection, and that's good. And like Owen said, you can use that to your advantage of negotiating. Maybe you did end up doing that, and at the end of the day, the house is still in good standing.
Yes. Yeah.
Yes.
Now, are you guys, like with the first time home buyer program, I learned, and I can't remember if I talked to you on about it or not, that the rural program, what Sheila qualifies for when the properties have a rural address.
USDA?
It's not a USDA loan. It's they qualify for it if it's the rural address.
Rural, okay.
And for first time home buyers, and that's what I'm really wanting her to take advantage of.
Kim, when
the only one that I know of is the USDA. I'm not
the USDA
sure.
0%
and that's based
down.
on address.
It's based on
Okay.
address.
Mhm.
It's based on the
Yeah.
address. But the man that I've been talking to, whose name is Santos, he never called it a USDA
Well,
loan because I'm
it's-
very familiar with those.
I don't know.
Okay.
It may be another. We can talk later, but it may be another rural home
Okay.
program, or they call it by a different name, or if it's larger acreage. There are some rural home programs.
Well, a lot of the ones that I've been looking into for her qualify in Paso, even the ones in the
Mhm.
residential streets.
so that's probably
So-
USDA
Really?
because it's
Okay.
a guaranteed rural home loan.
Okay.
Is what it's backed by.
Okay.
So it's backed by USDA, but it's called a rural guarantee home
For the
loan.
first time home buyer.
Mhm.
Okay.
And you don't have to be a first time buyer to use that.
Oh, this you do.
Yeah.
So maybe that is different. Okay.
Wow.
Wow.
Great question,
I know,
Jocelyn.
there's-
Thank you.
okay.
Yeah.
I know there are always great
There's so
loan
many
programs.
new
There's
loan
more.
programs, like
Yeah.
all the time. We're so excited to get into that more.
Mm-hmm.
So happy first time home buyers. So here
Oh.
here we are. We were, we'd been married for 2 years and we're like, how do you buy a house in California? It's so expensive. How can anyone do this? This is just so crazy out here. And we found a way to make it happen. If there's a will, there's a way. And what we ended up doing was we found a property that hit the market, and it wasn't just a regular house. It was actually a multifamily property. And so it was 4 units. And so what we found out is that if you buy a house that's a multi-unit property, the income from the other units can actually help you qualify. And so if you're buying like a duplex or something like that, you can use income from that property to help you get the loan to buy the property. And so at this point, I hadn't even been in real estate for 2 years yet. And so I didn't even have enough income to qualify for anything. We used Camille's W-2 income at the time to qualify, and the property's income to get the debt to income ratio to be where we needed to be. And so we were, young and in love, trying to make it work. And we found this house. It was a big fixer-upper. And we decided to live in one of the units that's one of the smaller units, and then rent out the other units because we knew that if we did that, it would help cover the mortgage.
Mm-hmm.
But it wasn't easy. It wasn't a smooth escrow at all. We wrote our offer, and there were multiple offers. There was like 8 people trying to buy this thing because everyone thought, oh, this is such a good deal. And so we thought we could have had it, but we lost. And we're like, oh, man. And the listing agent's like, well, do you want to be in backup position? We're like, please, just put us in backup. We were so excited, though. We really could have saw this working out. And then, 3-4 weeks later, we get a call from the listing agent. Hey, the buyers are backing out. Do you still want this property? And we're like, oh my gosh, yes, please, we would love it. Oh my gosh, this is so exciting. Like, okay, well, you just have to come up to our price. And it was $15,000 over the asking price. And we're like, no, we're not doing
People
that.
weren't doing that.
It's overpriced.
2019.
I don't want to pay $15,000 over the asking price. I'll pay you $5,000 over the asking price. And then they're like, okay, we're going to sell it to the next guy. Like, what? Are you kidding me? Like, seriously? Like, I thought this was meant to be, it was the second time. And they said, nope, someone else is going to pay $15K over, so you're out of luck. We're like, no, oh man, what is going on? So we forgot about it. We kept living our lives, kept, working, saving. And then we get another call. And they're like, hey, that buyer's backing out of escrow. Do you want the house? We're like, yes, please. And then they're like, oh yeah, they also paid for all of the home inspections and pest inspections, so here's copies of them if you want it. And we're like, oh my gosh, this felt like a total God thing, because it gave us time to save up enough money, extra money for the down payment. Plus, we got those reports. And by the third time, we were like, yes, please, we want it so bad. Please get it. Like, so we were all in. And we got under contract. We were in escrow. And this is why who you work with matters, because we had a lender who didn't really know what he was doing. And he was underwriting us. He said he could approve us for this amount. And then weeks kept going by and weeks kept going by. And I'm like, hey, so are we approved yet? He's like, oh, no, it's going to be, like another 24 or 48 hours. I said something to underwriting. I've been waiting to figure it out. And we're like pulling our hair out because our contingency time frame is coming up. It's like, if you don't release your loan contingency by day 17, the seller can kick you out of escrow. And we were like, no way, we don't want to lose this house. We worked so hard to get this under contract. We can't lose this thing. And it was at that moment when I was like, okay, this lender is not pulling it together. I need to call somebody else. So I called a superstar lender, Kim Rivas, in the house. And she is literally a rock star lender. She has helped save so many deals for us when things are really tough, or when a borrower has a certain type of situation that's very unique and a lot of other lenders can't finance certain borrowers. And so Kim has way more access to loans because she's a loan broker and she owns her own company. She was able to find us a specific loan program that helped us get the financing we needed to qualify for this property. And we had to extend, I think there was like a 3-week extension on the escrow to get everything pulled together, but we were able to close and get keys to our cute little first home.
Mm-hmm. So thank you, Kim.
Yes, thank you, Kim.
We always say thank you, Kim. And it wasn't as cute as it is now. We've worked a lot on it, but one of my stipulations was, okay, if we're going to live in a 490 square foot apartment, it's got to be cute. So we spent the summer working on it ourselves, and we scrapped together what we could. But we put in a tile shower, we got rid of the carpet, put in vinyl plank flooring. All we did was just paint the cabinets. We went to the Scratch and Dent at Idler's and put in new appliances. We went to the Habitat for Humanity and got a new toilet plus a vanity for $80 together. That was still to this day one of the best deals I've ever gotten. And look, our light isn't even on all the way up there, but it worked.
It was rough.
It was a little on the rough side, but you know what? It was just the two of us, and we were starting out.
Was this in San Luis? Or?
No, this was in Paso. Yeah.
Mm-hmm.
So we said, you know what? We're starting. This is a starter home, right? This is just a way to get our feet wet, get things going, and then we'll use our equity and move later. So that was our goal. And then we also renovated one of the other units, which was the main house. So we kind of this was a lot bigger. This was almost 1,000 square feet, but we put in the vinyl plank flooring here and painted, and like Joanna Gaines says, paint changes everything. Just a coat of paint changes everything. So we spent a lot of time that summer just working on it, and it was really hard, but it was worth it. And I think what ended up being the hardest part was that COVID happened while we were living there. So we were, by ourselves. Everyone, right, was isolated. No one really knew what was going on. But we're like, okay, we're in this little house together. We're going to make it work. And we did. And I'm so grateful. But it was one of the most challenging escrows we've ever had, which I'm thankful for. If we've ever had such a challenging one, at least it was with us and not our clients. But I think back to, gosh, I remember all the ups and downs of crying about things. Is this real? Is this not real? And it makes me even more empathetic to all the clients that I work with, because I know firsthand what it's like to have so much uncertainty, and to be able to go through that myself helped make it a lot easier for every client that we've worked with since.
Yeah.
So,
and with this loan program at the time, we were able to get in with only 5% down. And I believe they've just changed the rules for multifamily property again, so you can get up to 4 units with 5% down, which is amazing.
Yeah.
So for us, it was, like, how can you ever afford anything? Don't you need 20% down? 25% down is what you hear.
Yeah.
Well, no, there's actually some really great loan programs, 5% down, 3.5% down, FHA. There's all these different loan programs. And the beauty about this property was the rents that came in on it basically paid all of our mortgage.
Mm-hmm.
So we were able to live rent free and save up to be able to buy our next house.
Mm-hmm.
And then we kept that as a rental property. And so that's why we are such big believers in real estate and homeownership and investing, because once you get in, you start to see that market appreciation. You start to, if you can keep it as a rental, you can rent it out. Hopefully you can pay your mortgage or cash flow a little bit. And that's how you can build real wealth through real estate.
Mm-hmm. Yeah. So summary on how to find this house, right? The perfect house for you depends on the stage of life you're in. For us, the perfect house at that time was a fixer-upper, 45 minutes from our office and our friends, and a starter home, right? So the perfect house, the starter home, or the dream home for you. Your first step is going to be to partner with a local agent who's going to help you get connected to everyone else, right? So we have amazing tools for searching for all of our buyers, so that way you have every home at your fingertip. You can request showings, you can talk to a lender, you can just make it all seamless through one spot. And so that's what we love about this app that we have, which is linked directly to our multiple listing service. And then we're going to transition into the lending process, because I'm sure the majority of your questions are going to be about lending and financing. But the biggest things that we always share with our buyers are essentially just don't make large purchases during your escrow. Don't quit your job during escrow. Wait till after the closing day.
Yes.
Don't move large sums of money around, et cetera, et cetera. So anyway, we're going to pass this on to Kim. And Kim, you just come and share with us. And if there are questions, then please ask. You just press the down button.
Oh, perfect. Thank you guys so much. My name's Kim Rivas. I own Katie Capital Mortgage. We've been in business since 2013, February of 2013, so almost 10 years. I've been in the business, will be 20 years in November of next year. No, it was 20 years this year.
Oh,
so,
wow.
Yeah.
Happy anniversary.
Thank you. I just thought about that. So, one of the things about us, and we'll talk about this a little bit, is Katie Capital is a mortgage broker / banker. So what that means is we deal with probably 20 to 30 different banks. So we can pick and choose who we want to use based on what your specific needs are. And we also fund the majority of our own loans in-house. So we kind of marry the best of both worlds. Most brokers don't fund their own loans. They send it out to a bank, and then the bank funds their loans. So we have the ability to fund things a little bit quicker. You could sign docs in the morning. We could fund and close that day. We don't want to do that, but we will. So we're in the North County. We fund anywhere in the state of California. We haven't branched out to other states yet. We're pretty comfortable here in California. And I've been in the business for, like I said, over 19 years. One of the things that's different about me, and probably Owen and Camille can both attest, I'm available 7 days a week. I did a pre-qual last night after my son's 17th birthday party. They wrote an offer, and we're supposed to get acceptance tomorrow. So
nice.
It makes a difference, because not to say you're not planning on buying a house, and we like to be more proactive than doing it Sunday night at 7:00. We want to get you in and start looking first. But it happens. You may be driving by and see an open house and be like, oh my gosh, this is the house. Mm-hmm. So if you need to talk to me, I'm available after hours and weekends to try to get you in. All right. So getting in is easy, and I don't say that lightly. It is a process, but there are so many tools that we have now to be able to help you. I have based my entire business when I first started on helping first-time buyers get into the market. I actually helped write some of the grant programs for the County of San Luis Obispo when they actually were doing down payment assistance funds, which was a great experience, and it gave me a lot of insight into first-time buyers, and I really enjoyed that. And to me, it's one of the biggest not thrills, but it really is important when you see the people get in, because it's like, it's the biggest purchase they're ever going to make in your life, right? And for me to be able to be a part of that is really important to us, and we really appreciate being able to do that. So when I say getting in is easy, there are so many more programs now than there used to be, and I don't think a lot of people know that, where you can get in with low down payment or zero down payment still, even after the crisis in 07-08, which I went through. There are a ton of down payment assistance programs, and you don't have to be a first-time home buyer in some of them to actually take advantage of it. Payment similar to average rent. I think this is, I don't want to say stretching it. Rents have gotten a lot more expensive in the past couple of years. You guys have probably noticed if you're paying rent, and especially if you have to move, which I know a lot of my clients that are buying now have been forced out of 2 or 3 homes just in the past 3 or 4 years, because they have to move and then find another place, and rents have gotten so much more expensive with inflation. One of the things that has kept inflation up longer is rents. And so those have started to come back down a little bit, but so have interest rates. So fingers crossed. Seller can pay closing costs. This is something that Owen and Camille are very good at, is negotiating to have the seller pay some, if not all, of your closing costs. That can prove to be a little more difficult in a seller's market. It's not impossible. I just have one right now. We're closing in a couple of days where the seller paid $15,000 for the buyer's closing costs. So it's not impossible, and it's a great tool to get in, especially in combination with the down payment assistance program. There also, we'll talk about, are some closing cost assistance as well. And you don't have to have perfect credit. Some people are like, I have to have a 700, I have to have a 740. You don't. You do not. It helps, but it doesn't exclude you if you don't have perfect credit. This may be a little bit hard to read on here, but you guys do have and it's probably harder to read on there. So if you want, I'll get a copy of it for you. This is just a rent versus buy. I had an agent call me the other day, and she said, I have some clients that are paying $5,000 a month for rent. And I'm like, what? That's 100% interest on $5,000 a month. Okay. So this is just a comparison I did just to kind of give you an idea of what investing into a property looks like just over time. Okay, and what it can do for you as far as your appreciation, your amortization, and overall, what I love teaching my clients about is wealth creation. Okay, because there's no other appreciating asset in the United States like a home. Okay, Owen showed a chart, I think, earlier, and since the 1970s, it's been the biggest appreciating asset in the U.S. So, so I love this scenario. I can run this with any purchase price if you guys want to see that. But this is a property, if you're looking at paying $3,000 a month in rent, which is probably pretty average right now, versus, I think it cut off the top part of it, purchasing a home. But interest rate 6.75, which is pretty much where it is right now. Cash flow difference. So you're going to be paying about $700 more in rent. More in a mortgage than you would in rent. But your appreciation gain after 10 years is $136,000. That's just appreciation. Yeah. In addition to that, you're going to add another $35,000, and this in amortization. So just by paying down the loan. So this is in 5 years. Okay, 6, 7, and then I did it all the way through 10. So in 10 years, you can see $295,000 between appreciation and amortization. Okay, so
what was the purchase price for this house?
I think $629 is what it says.
Right here. So $629 estimated value, and I used 4% appreciation, which is on the lower side. San Luis Obispo County, I think their average appreciation, or San Luis Obispo, is 6%. So I'd rather be conservative on the numbers, but this is it's a great analysis to show you guys, because if we look at this a year from now, you're going to be paying more in rent, right? But if you get a fixed rate mortgage, your mortgage doesn't change.
Yeah.
So that's why I say you're paying 100% interest when you're paying rent. Okay. Nothing is going towards the value of the home. So again, I can do this on any purchase price. If you guys have one, we can run an analysis based on your rent, but it's a great analysis to look at. So when we do a qualification, there's 5 things that we look at. It's super easy. People come into my office all the time and they're like, oh my God, that was so easy. I'm like, it is. It's pretty easy. We're going to look at 5 things. They're in order of importance. So the first thing is your down payment. And we're going to talk about that. How much you have down. Do we need down payment assistance? Do we want to get a gift? And kind of get a game plan. You may have enough for 20% down, but you're like, I got kids going to college. I've got high schoolers. I got to pay for school. And so we're going to talk about what your life goals are, just not how much money you have in the bank, because we want to put an entire plan together for you. Credit scores, how much debt to income you have, job stability, and reserves. And we're going to put all of those things together and create a plan for you to be able to buy a home. Okay. So a lot of people want to know why they should get pre-approved. They're like, why do I have to do this before I go look for a home, like Owen said? So you don't call me Sunday night at 7 o'clock. No, I'm just kidding. I don't mind. I really don't. So one, we want to know what price range you're going to look in, right? Like Owen said, we don't want to go out and fall in love with this beautiful Victorian house and it's $300,000 over what you actually want to pay per month. You may be able to qualify for that, but you may not like the payment, okay? You can make an offer as soon as you find a home, which is very important, because if you go see a house, again, Sunday afternoon at 5 o'clock and there's 7 other offers in, but you want this house, we need to make an offer that night. So it's just expediting that process so you don't have to wait on me to pre-approve you, okay? Ability to have your closing costs paid for. And what I mean by that is we want to give you an estimate up front of what your costs are going to be. So if we need to negotiate that into a sales price or ask the seller for a credit, you guys know up front what that's going to be. Seller sees your shares about buying. I'll tell you, this is a small county, and we have been doing business for 20 years. So if they see a pre-approval letter coming from us, it will carry more weight than somebody who gets it from a Rocket Mortgage or some online lender. Yeah. You can probably attest to that too. And it expedites the purchase process. If we already have all of your documentation, you get an accepted offer. We're not waiting 3 or 4 days for you to get everything into us. We're ready to go. Okay. Which you're saying, well, why does it have to go so quick? A lot of sellers like a fast escrow, especially if they have somewhere to go or they may already have a place in escrow. So what type of mortgage is right for you? This is part of your plan, right? How long do you expect to live in the property? Do you want to have your mortgage paid off by a certain time because you're going to retire, or you want to move, or you want to pass it down to your kids, whatever it might be? What are your current debt payments? A lot of people don't talk about this, but it's important that you do, because we don't want to put you in a 15-year fixed rate mortgage, even though you may qualify for that, if you want a house hack, okay? Because we want you to be able to cash flow that property when you exit it to buy your new house, okay? So all of these things are important and things that we will talk about, not just what's my payment going to be and what's the number I qualify for. Okay, so some of the down payment assistance, this is just a scratching the surface. We'd be here for a couple more hours, which nobody wants to listen to me talk for that long. But there are a lot of down payment assistance programs. GSFA, Golden State Finance, Cal HFA, again, GFSA, I'm going to talk about those two quite a bit. Conventional, FHA, VA, and USDA. So USDA has 2 different sides of it. There's a guaranteed rural home loan program, which is what we do, and there's a direct. And the direct goes directly through USDA. It's a different product. It's income limited, but it's very income limited. So that's something that we don't deal with, but we do the guaranteed home loans. I've done hundreds and hundreds of them. And not recently though, because it's a little bit tougher with our price points now on how they qualify, but it's a great program if you can get in on it. Is anybody a veteran here? Any veterans? Okay, so I'll kind of skip over that. CalHFA is one of my favorites. It is a down payment assistance program where they will give you 3 or 3.5% of the purchase price towards your down payment. And when I say give, it's a loan, but you don't have to repay it until you refinance or sell the property. Okay. There is another part of CalHFA that's called Dream for All program that came out last year, and they were doing a 20% down payment, which was amazing. It lasted about 10 days.
Mm-hmm.
That's how much money they had to fund it. It went very quickly, but it's supposed to come back in spring. So you do have to be a first-time home buyer for that particular program, but it's a great program. So if you're interested, we can talk about that as an option. Seller allowed to pay closing costs, and there are permanent buy downs. What I mean by buy downs is you can actually buy the interest rate down a little bit further. So if we did do closing cost assistance, you can actually use that to buy the interest rate down to get a lower rate. But the rates on these are phenomenal. They're the same as regular 30-year fixed, conventional, or FHA loans. So, and you get the down payment assistance. So we do quite a few of these, and we're very familiar with the process. So this is an example using a down payment assistance. So this is a $650,000 house, and I used an FHA loan. So you can see kind of how it works. So 3.5% down. This would be the total payment on $650,000, but that's $0 out of your pocket as for the down payment. This is the estimated closing costs. This is our down payment assistance. So this is money that's used for the down payment you aren't paying. And then closing cost assistance, we can get up to $13,000, which is 2% of the purchase price. So left in this cash to close is about $7,000. So you can bring that money in. We can negotiate to have the seller pay those closing costs. So literally you can get in with $0 down. Okay, which I've done a lot of times. But it's a great option for anybody who's a first-time buyer. And first-time buyer means haven't owned a home in the last 3 years.
In California, specifically?
Anywhere.
Anywhere.
Yeah. GFSA is a really good down payment assistance program as well. This one is slightly more limited, and I'll tell you why, but it's a phenomenal program as well. 3.5% to 5% down payment assistance. So depending on if you do a conventional loan or an FHA loan, you can get the down payment and the down payment assistance. There is a repayment program and a deferred repayment, which means it technically could be forgiven after a certain amount of time. 0% rate on the second for the deferred payment. If there's a grant program, we have down payment assistance with grant programs where it can actually be forgiven after 3 years. So that's a nice option as well. The grant programs are a little bit more income restricted. This one does not have income restrictions if you do an FHA loan. If you do conventional loans, it is more income restricted because they go by Fannie Freddie median income guidelines. Seller can pay closing costs. You can do buy downs, and we'll work with any of these loans. So FHA, VA, USDA, or conventional loans. So for the GFSA, the deferred down payment qualification, this means you don't pay anything on that down payment that they're giving you until you sell, refinance, but there's no interest on it, which is great. You do have to work for a GFSA county member, which San Luis Obispo County is a member, but that means you have to work for the county.
Oh, so it's like for county employees?
Yes.
Like if they work at a Atascadero hospital, does that count?
So that will count if they are one of these. So this is the down payment assistance, but the second has to be repaid. Meaning
has to be
now. Like you have a second payment.
So what if you're a retired staff?
I believe that you can do that.
Retired.
Yeah, right up here. So, and I believe that, I know we have a lot of clients that are psych techs. They fall under the medical and healthcare workers. So this one is the one that works for state of California workers that fall in here. Teachers, UC program, so that works great. Cal Fire. Yeah, so it's not all inclusive, but it is a pretty big list. And the interest rates on this are actually sometimes better than regular rates.
Wow.
So, additional programs, again, it works with a VA and a USDA loan, but I'm not going to get into that because it's such a small group of people that we can assist with those. So. Okay. So Owen and Camille asked me to include something about ADUs and purchasing homes with ADUs because this just recently changed, excuse me, for conventional loans and for FHA. So this was lacking for all of these loans because there's so many properties in California, and with the new legislation that allows you to build ADUs and actually sell ADUs separately, we weren't able to give them any income when you were qualifying. It was just, you're buying a house with an ADU, good for you. But we weren't able to qualify you for any more because of the rents coming in from that ADU. We can do that now. So as of a couple weeks ago, we can do it with FHA, which is amazing. Conventional loans, we have been able to do it for about a year now. So you can do a conventional loan with an ADU with as little as 3%. And FHA 3.5%, and these will also work. These rules also apply to the down payment assistance program. So if you have a house with an ADU and it rents for $2,000 a month, we can use 75% of those rents to help you qualify for that house. So it's a great program. It does have to be a legal ADU, meaning not a converted garage that they didn't do with permits. But we can use that income, which is great. Okay. FHA has also come out with allowing us to do an ADU on a renovation loan. So renovation loans are when you have a property, and usually they're distressed properties because you can't finance them any other way. However, now they've opened it up to be able to add ADUs. Okay. So it does have to be an attached to the house ADU. It can't be a separate ADU, but they will give you 75% of, if it's already there, they give you 75%. If you're going to build it, you can purchase a home with a renovation loan. And if your plan is to build the ADU, they'll give you 50% of the rental value for whatever you're going to build. So you can get income credit on something that's not even built yet, which is great. Yeah.
Amazing.
Yeah. So we actually did this. It wasn't with the ADU, but with one of Owen and Camille's clients down in was it Grover Beach, Oceano? Oceano. The house was a mess. No, it wasn't that bad. But they did this, renovated it, added a unit. It worked out great for them, and then they bought their next house. They did the house hacking, which was great for them because they had a growing family. So this is a really good option. We haven't done a ton of the renovation loans just because the market was so active and there was so much competition that people didn't want to deal with these. But I think we're coming to that point now where we're seeing stuff sit for a little bit longer and sellers are more open to entertaining offers. It is a little bit of a process because we have to get contractors involved, but we are experts at doing these. I've done them for 20 years. So we can walk you through that process. So I wanted to kind of go through a little bit of example and numbers of purchasing a home with an ADU. And if you guys will refer to the printout, I'm hoping you can read that because I can't. No. So this is purchasing with an ADU. So the minimum down payment, I had originally 3%, but it actually minimum down, if we go FHA is 3.5%. If we go with a conventional loan, we have to have 5% down. So in this case, the down payment would be about $39,000 if we wanted to go conventional. So the biggest difference between using a conventional loan and an FHA loan on multi-units is the amount of rent that they'll give you. On a conventional loan, if there's 3 other units, they're going to give you 75% credit of whatever those rents are, which is phenomenal. Okay, and I'll go through an example of that. If it's an FHA loan, you're not going to get credit for all of those rents. They're going to do a test to make sure that it's self-sufficient based on the unit that you're going to be living in. If it's 2 units, they'll use rents, but anything over 2 units, it's a self-sufficiency test. And so you don't get credit for all of those rents. So it makes it a little bit more difficult with FHA to buy more than 2 units. But with a conventional loan, this is going to open that up a lot with having to do 5% down rather than it used to be 25% down. So if the down payment is $39,000, I'm just going to ignore that and just pretend this is payment. Mortgage is $5,000, taxes, insurance, and mortgage insurance. So whenever you put less than 20% down, you do have mortgage insurance. It's gotten a ton less expensive over the years, but you would still have that insurance until you reach right below 80% loan to value. So let's say the total payment is about $6,100. I'm assuming this is a 3-unit property. So the other 2 units rent for $2,000 each. I think that's pretty fair, right? Okay, that's probably pretty cheap rent for most other units here. So if I take the total payment, the rent from the other units is $4,000. Your mortgage is only $2,100. Okay, because you're paying the rest of the mortgage with the other units that you're collecting. Right. And you only have to qualify for a mortgage of about $3,100. Okay. So you're getting $4,000, but we're going to take 75% of that and use it to qualify. So rather than qualifying for a $6,000 mortgage, we only are qualifying for a $3,100 mortgage. So it makes a huge difference. And then down payment wise, that is a game changer. Going from 25%. You could actually do it 15% if you're going to buy it as a primary before, but even 5 to 15% is a big difference. Wow. Okay. So, again, we're located in Paso Robles, but it doesn't really matter because nobody goes into anybody's office anymore, right? But we do loans in California. And we're happy to set up an in-person consultation, or we do over the phone. And if it's evening or weekend, that works fine too. So does anybody have questions?
Questions? Anybody?
Like on a property that we're looking at, we would be dealing directly with the buyers and not doing any realtors, and that would be then handling it straight through you for financing. Is that correct?
So there's no agents involved in it. Possibly. So if you have a lender, we would still have to be involved.
No, not having a lender, but unless the owner carries some paper.
You're talking about the owner carrying a note. Yeah, then we wouldn't be involved.
You wouldn't be involved.
No.
Okay.
You would just have an escrow company that would facilitate.
Okay. So you wouldn't. None of you guys would be involved in that then.
Unless you needed the help.
Yeah, I was going to say.
Like a real estate professional making sure things go well in the contract.
Okay.
And
especially with seller finance.
Yeah, seller financing, just making sure everything's structured right so you have someone facilitating the transaction, because there's a lot of risk and liability in California. Mm-hmm. You know, you might be friends now and things might be great, but we've seen it after the close of escrow where things get really, really dicey, especially with owner financing. So having that third party, like an agent, kind of help facilitate the transaction can actually help you mitigate a lot of the risks.
Okay, so if she were to carry half of the paper, though, then financing would still she would still need financing
on the lender portion.
That makes it a lot more difficult because the financing that we do, we're going to want to go in first position.
Right.
So she would have to agree to be in second position.
Yes.
And it depends on how that note is written and what type of financing you would need on the first and how that's all structured.
Well, that's what I'm asking. Mm-hmm. If like these first time home buyer programs, USDA, would those work on a first of half of a purchase price and with the owner carrying back, say, for 10 years?
And in that case, there would probably have to be some sort of down payment because it's not a, you wouldn't need the down payment assistance, put it that way. So there would probably have to be some sort of small down payment.
Okay.
Say if you're doing FHA, she would have to come in with the 3.5%, and then the seller could carry a second,
So
and then
say
you would
if
have a
it's
first.
550,000.
Mhm.
How much are we talking that she needs to come in with?
So about 19,000.
Okay.
Yeah.
Just good to know.
That the seller financing portion, there's a lot more to it.
Okay.
It has to be a minimum of 5-year note. It has to be close to market rates, which is subjective.
Right. Right.
But yes, you can do that. There just has to be some skin in the game
Okay.
because there's no county program or state program that's coming in with the funds for the down payment.
But you have lenders that would work with her. She wouldn't have to go to a hard money lender. Is
No.
what I'm saying.
No.
Okay.
No. She could actually probably do a conventional loan. I mean,
Oh,
depending on credit, you just
Mhm.
have a first and a second, and then the seller is carrying the second.
Okay. Thank you.
Great question.
Kim can make anything happen.
Yes, she can.
We'll see.
Could you just also just address like purchasing land or like a lot? I've seen a few.
Mhm.
Like how does the loan with a land loan work?
So there's a couple different ways you can do it. And I'll let Owens probably speak to this a little bit, but a lot of times on land, there will be seller financing that you can get because loans on land are not as common.
Right.
Not to say you can't get it. There are a few banks locally that will actually do land loans. And then it's usually a larger down payment, so 35-40% of the price. And then it's a shorter term because they don't want to hold it.
Right.
However, there are some all-in-one construction loans where you can purchase the land, do the construction, and it's the final takeout financing all together. Oh, we're brewing
my
coffee.
Ice machine.
Oh, ice maker. I thought I hit a button. And so that may be a good option because you can do that with as little as 3.5% down. It is a more detailed process, and we'd have to have a seller who's really willing to sit in a longer escrow because we have to get the plans, the specs, the elevations. We've got to get the bid from the contractor and pretty much be ready to get permits before we close escrow.
That could take months.
Right.
Yeah. I have one we started in August and we're closing in January, which is actually pretty quick to be able to get
That is
close
pretty
to
fast.
permits.
Wow.
So, but it's doable.
Mm-hmm.
And they're a first time home buyer and they're getting land in a brand new house. So,
Where's the land?
in Atascadero.
Nice.
Yeah.
Good for them.
Yeah. It's been a process, but
Yeah.
yeah. As a first time buyer, that's not something I necessarily recommend.
I know.
You know,
That's
unless you
cool.
have her family's a builder,
Mhm.
and so they're kind of helping her. They're not the contractor, but they're helping her along the way. So it's been a little bit smoother. But buying a house is enough, and having to work with contractor and architect and all that makes it even tougher. But it is definitely doable, and I've done a lot of them.
Mm-hmm.
And land, what's your experience?
Oh yeah. So what people do is owner financing is super popular. We've done a few like that where they get in on owner financing and then they'll get a construction loan.
Right.
And so that's another thing. If you're going to get construction financing, if it's secured by the property, you need to have the owner be okay with that because the bank's going to want to subordinate.
They'll be in first position. Yeah.
So you have to find a seller who's willing to subordinate their loan beneath the bank's loan. And another bank we've worked with is Bank of Santa Maria. They have got some really great land and construction loans. Ceslock has some as well where they'll finance the land and finance the construction build out. So
And I think it's like 40 to 50% down.
yeah, the down payment though
Yeah.
is
Right.
huge. It's like, I mean, if you're getting a land that's like 100 to 200K price point, maybe that's doable.
Yeah.
But with that level of down payment, you could get a house that's built for not a lot of effort and hassle.
And the cost per square foot right now,
Mhm.
I think, is probably more to build than it is to buy.
Yep.
believe it or not, it's really expensive right now to build with all the county add-ons as far as school fees, fire sprinklers if it's over a certain square footage, your low income housing fee now. It is certainly very expensive cost square foot wise to build.
Mhm.
So
Solar, every house needs
solar.
Yeah.
So it's increased exponentially probably and inflation in the past 5 years.
Oh, I know.
So
But
Do
yeah,
they require you to do solar?
it's a
every
California requirement now.
in California. That adds an extra $20,000 to all the home prices everyone's seeing, you know.
Yeah.
Any other questions?
No. Okay.
All right, everyone. Well, thank you all for coming in today.
Thank you.
And
very much.
yeah,
Thank
we'll
you.
be here hanging out. So
Yeah.
thanks for being here.
Thank you.
Sorry about that.